Good afternoon, everybody. It is the 22nd of August. It is a nice, beautiful Wednesday outside where I'm at, and welcome to the crypto markets. I don't know how many of you were trading last night or were looking at what was happening last night. I'm sure you know by now all of the kind of oddness of things going on in Bitcoin. I was trading it last night and it was pretty wild. And I was trading it not because I was waiting for some news to come up, but because the price action was telling us that there was something going to happen. If you remember yesterday, we talked about this pattern here on our screen, this triangle, which we were looking for it to break above. And we had those, I had those buy and sell targets waiting for myself. And what's really kind of not last night, I was thinking, is this straight up manipulation? Because I mean, it is and it isn't. Here's the deal. What happened last night, in case you don't know, is that BitMEX, the exchange BitMEX, went offline for about 30 minutes because they had a scheduled maintenance with their physical servers. So that happened right on the dot at 8 o'clock Central Standard Time. Right when that happened, Bitcoin then went from 64.50 all the way up to the high of that hour. Got all the way up to 68.49. All right. Bit of a leap. Bit of a leap. And so what we should recognize is that manipulation or not? Well, that depends. The issue with this is that when that happened, people who were or are BitMEX customers who had active short positions, they were not able to close out of those positions. And I don't know if they actually got liquidated or not, but we had this very, very powerful drive up. And then all we've really done since then, ever since that hour last night, we've just done nothing but correct that entire move. So we've retraced that entire move, and we've fallen actually at 10 o'clock this morning. We decided we would drop from 66.50 all the way down to where we're currently at 64.35. And that's currently where we're sitting. Been heavy volume on both ends of these moves. This is a typical BART pattern that we're looking at. And then, as we see here, we are possibly forming a base. We're really trading right back into the range that we were yesterday. You know, compared to yesterday's close to today, we are down 0.63%. Not much to look at. So the point that I'm making is that was not the cause of the move. All right? Because if in fact there was the intention to have some type of short squeeze from an entire exchange, we would have seen that. But still, it's a little nuts. I've seen some pretty strange moves in the short time that I've been a trader. The U.S. equity markets and the futures markets during the 08 debacle, that was a bit crazy. The Swiss franc a few years ago, the Brexit. I mean, there have been some wicked, weird moves before and after those events. This one is so blatant. I don't know how you can not suggest that there was something going on. But also at the same time, it didn't really move that much. We did not really move. I mean, a 200 or 400 point gain is a big deal right now, but in the grand scheme, it's not. There was not a lot of price action that moved that up. Now, they announced this maintenance on the 17th, okay? On the 17th, they announced that maintenance. The thing is, though, and this is an issue of where the technicals were leading the fundamentals, which is fairly common. Generally, that is the case. We had this rise in Bitcoin and cryptos, and we were already forming a consolidated trading range. And those usually will end up forming into triangles of some sorts. So that is not a surprise. The actual response that we saw, I think, was very much a technical only move and not because BitMEX shut down. Okay? That is a correlation. That is not a causation. I'm sure I deviate a lot from where a lot of other folks are saying. See, this is the problem with people who trade off of events and news, is that they're always looking for a news and event to be the cause or the reason for something, and when it's not apparent that it is, people just start kind of making things up. It's very easy to attribute this to the BitMEX and to suggest that there might be some more going on, because that's what I thought too. I thought, oh, these exchanges are trying to dick each other over, but I don't really see that here at all. The volume is not enough to warrant a huge short covering rally from a single exchange. Just not seeing that happen. So really, from yesterday, no change in our broader outlook. In fact, if we were going to have some type of broader outlook, we're looking actually weaker to test the downside more, maybe to retest the lows of the year, which were placed back in last. No, that wasn't the low. Sorry, I'm gonna go back here on the daily. Were those the new lows? No, the new lows are painted on January or June 28th. Now, what is interesting about the move, and I'll zip on over here, is that we've had a pretty extensive and drawn out move from this most recent swing. So if we take the day after that swing high to where we are now 28 days into that move. And ever since we've had the bear move, we have had those lengths of time, some longer than others. This one lasted 54 days. That one lasted, 31 days. And then the big one up here, I don't know if you want to count this as two separate swings. Probably could. 30 days. And then the first one was 12 days. So we're definitely within the normal range of seeing a structural bull move off of this zone. There's one thing I kind of want to call your attention to. That's I think we've seen this before, but I don't know if I've shared it recently. There's something called a mirrored foldback, and a mirrored foldback is essentially where you see an instrument will retrace the same kind of activity that it has previously done. It basically mirrors the swings. Doesn't mean it mirrors the same price levels. It just mirrors the same swings. So if we look back here, got to find where I put that idea. All right, here it is. If you want to look at this yourself, I'll put the link in chat. I made this on June 18th, and so what you're looking at, this is kind of a rare thing to see, only because not many people use it. It's an old form of technical analysis from William Delbert Gann's work. This is a square of 52. That's the time frame that we're working in. And the square 52, it's a 52-week time cycle that begins at an important high or low. In this case, the all-time high for Bitcoin is where we started this. What we have is the exact center being traded. That was back on the 18th of June. And it was near the bottom there in a downtrend, which means that as we get to the midpoint of that cycle, we should see some type of change. Now, we had a 180-day cycle from the beginning of that to where we ended up here. And a mirrored foldback, again, look at this pattern that I drew on here. this is the pattern that we should observe Bitcoin make as we move on in the year. Okay. What we're looking for is two kind of things. We're not looking for the exact price. We're looking for structure. All right. So we want to see this kind of a pattern play out again. All right. We're not looking for it to, it can go higher, it can go lower, but what we're looking for basically is swings. So swing low, swing high, swing low, swing high. Looks like a swing low, swing high, swing low, and so forth. That's the kind of structure we want to see. And this theory is from Michael Jenkins, called The Mirrored Foldback, and it's from his book. Oh, I don't remember. I think it was written in the 80s or 90s. I got to check. But when I hit the play, this is always fun to look at. Because I hadn't looked at it until we were looking at it this morning in the Forex lens. For Forex lens for our Forex 7:30 session. I hadn't looked at this, and I couldn't not talk about the price action last night. it was just had to do it. It was important to do it. So if I hit the play button, that catches us up to where we're currently at, and we can see that does this theory hold up so far? Sure, yeah, it does. What we see is we see price reacting pretty much in sync, or not price, but we see the trends here happening fairly in sync with the projected swings. So, when I'm looking at this here, it makes sense for us to be at a swing low around this area. All right, maybe if I would have to take this and tighten this up a little bit, but as I'm looking at it, so far we are following the structure of this mirrored foldback. And in fact, why don't we see, I started this on June 15th. I want to go to June 15th. Where are you at? Did they move it? No, they didn't. I just forgot. All right, so we go from here to June 15th. All right, now I want to flip it and put that where I started it. And if I squeeze it, kind of get it to be in the rough representation of what we've got going on, that's what we're looking at. Now, it doesn't have to be exact in time, and it doesn't have to be exact in price or the date. We're just looking for the structure. I think, is that pretty clear? Does everybody kind of see what I'm getting at? That we're looking for it to repeat a structure and a pattern? Because mirrored foldbacks, you'll see them all over the place. They happen everywhere. We could look at, well, let's look at the dollar yen. This is a good example. If we go to the weekly chart for the dollar yen, I scroll all the way out. Oops. This is really what we're seeing here. We have a mirrored foldback pattern playing out in the dollar yen. Is it an exact copy? Replica? No. But actually, what do I want to do here? I'll just take this whole range. Flip or flipped. Is it exact? No. Are we getting the same kind of structure playing out here? Yes. All right, so if I'm looking at the dollar yen, what am I expecting to see in the future here? Higher prices. That is what I'm looking at in the future. Now, it's This is probably stuff you have not seen before. That's totally fine because, you know, not a lot of, and this is not me tooting my own horn, but not a lot of folks who, you know, do services like this really extend their education beyond, stuff on Fibonacci's, Bollinger Bands, and Elliott Wave. And then some people do Wyckoff and think that that is anything complicated or Wyckoff is old and there's nothing wrong with it. It's just, I mean, you don't have to analyze it that way anymore. There's much more efficient ways. But, or Wyckoff, potato. But here's the fold back on the dollar yen. You'll see this in any market on long and short term time frames. You know, we could look at the British pound, for example. I'm just going with markets that I trade a lot and I'm familiar with. On the British pound, we could do look at the daily, and you can probably see without even having to draw it, but you can see that there's a type of a fold back pattern here. You know, we have the letter M formation, any kind of M top or W bottom. Those are all examples of fold back patterns. All right. Cool. Okay, coming back to where we were though. And looking at Bitcoin, we don't need to see this anymore. All right. Now, looking at this, is there a head and shoulders play at hand? Sure. Yes, there could be. What I'm mostly interested in looking at though is according to the daily, we are beyond the 45-degree angle. All right. If I zip it down to the hourly, you know, we can see that we're next to the 45-degree angle. So it's hard for price to get beyond this 45-degree angle because we have been, I mean, if we're looking at the square 52 and we're comparing the 45-degree angles, this is the bearish angle. This is the angle we've been trading ever since the all-time high. We've been following this 45-degree angle's direction for the entire year so far. Actually, more than that. You know, we just are going to have difficulty trading up, and then you can see that it's the distance that we traded was only up to this Gann angle here. So, you know, why did it stop at 68.30 or 68.80 in that zone? Why did it stop there? Well, that's, I mean, the market geometry using momentum angles is where it halts. So the current behavior now is to determine where price action goes from here. We've fallen back. This is hard to digest and hard to do analysis on because we had this massive spike up. And if you start to take a lot of stock into the pattern from last night, the behavior of price last night, then it makes it a little bit more difficult. If you just want to trade it like you didn't know what was going on, then this looks to be pretty ugly, actually. Like we may have some selling pressure here pretty soon to the downside more because we broke this angle. However, on the daily, and I don't know if this is a painting issue or what with TradingView, but on the daily we are sitting right on that 45, and we clearly have a large amount of volume near a market bottom. And so that should be telling us something. Yes, this is a head and shoulders looking setup. Yes, that could go into play, and we could see it travel down farther. But really, just looking at the thing is that every day we move forward, the harder it is, and the faster we have to move down to maintain a bearish direction to the downside on this 45-degree angle. Okay, because the general theory in Gann's in anything in Gann relating to angles is that the 45-degree angle is the major trend angle. Now that's not true in every market. Some a guy named man, I forget his first name, Murray. He created the Murray math system. He made a point of pointing out that, or maybe it was Gann, and he repeated Gann. I don't remember. But most markets generally like to move against a 45-degree angle as its major momentum angle. Others will do it with a higher pitch or a slower pitch. So we could be at a higher pitch like a 60-degree angle or a 33-degree angle. So it depends really on your market. But for Bitcoin at least, and almost all the other cryptocurrencies, the 45-degree angle seems to be a pretty good zone for watching prices. Ouch. I dropped the chair on my toe. It's a good area to see prices move and see them just here. I'm trying to figure out, is this a painting issue? Dang it. I totally lost my train of thought too. All right. The 45-degree angle in cryptos is pretty standard. So looking at this, again, nice volume here. We are still above the close of yesterday, or the close of yesterday is still extremely high compared to the open, and we have not seen a new low compared to yesterday. So this will be interesting to see play out here as we move on, into tomorrow being Thursday. The other one thing is tomorrow is the ETF decision on the ProShares ARCA ETF. I thought I had this pulled up from the NASDAQ. Now there's a difference between all right, here's the news article. This is from CoinDesk. Love them or hate them. Less than a month after delaying a decision on an ETF for the U.S. Securities and Exchange Commission, the SEC is poised to approve or disapprove another pair of proposed ETFs. Okay, so they denied the SIBOs, or actually they pushed it back, so they didn't deny it. But the ProShares one, with the New York Stock Exchange, it can't be delayed under those rules. So they have to make a decision on this. And the thing is that the SEC has to have a very good decision to deny this. And it really, the SEC is more concerned about the underlying, is it a derivative or what's going on here? So things that have been holding and trying to get ETFs of cryptocurrency holdings, the SEC has been kind of lax to do about. But this one's different because the I don't know if it mentions it in here or not, but the ProShares ETF. Listen, ProShares, they have been around for a while. They have ETFs already in existence. They're very well known. And I don't know if we really need to get into how well known the New York Stock Exchange is. But we really don't need to do that. The thing is that these ETFs... Oh, okay, right here. It says, as well as ProShares, Bitcoin futures. Yeah, the Bitcoin ETF for ProShares is based on the futures market. It's not based off of the spot market. Okay, so it's based off of the value is derived from the futures market, which gives this a lot more easy of a pass to get approved. So I don't like to gamble with this stuff because that's what it is, but I'm banking on a bit of a surprise in that this would get approved, just because ProShares is already well known to the SEC. They also have, they have a number of ETFs already. It's they know what they're doing. It's not something new to them to do an ETF. So there's a lot of safety and security with that brand, which is very important. So we should there's going to be some activity tomorrow, folks, and I'm not planning on moving anything but I certainly don't have any stops. I do not have any stops that I do not want a damn thing of mine to get triggered by a stop run or just due to insane volatility. There is going to be, I'm assuming there's going to be a lot of crazy movement tomorrow. I'm unsure when the SEC is doing this. SEC ETF Bitcoin decision. Let's see. This is okay. They're doing a decision. Okay, this is on CNBC. The ETF will be approved by the Securities and Exchange. It'll be the first Bitcoin-based ETF. ProShares has $30 billion under management. They filed for 2 Bitcoin ETFs in September. The plan to track Bitcoin futures contract on the Chicago, and it will trade on the New York Stock Exchange, according to the SEC filing. They declined to comment on the status of the. Sorry, I'm gonna get into some more stuff here, folks. Sorry, I'm just want to make sure I'm getting all this information correct. Bitwise submitted its own ETF in June. Shouldn't read into Thursday's deadline. Yeah, that's true. It's a Bitcoin jumps ahead of other SEC. EC would be approved in August, but we know that didn't happen. The cryptocurrency rose roughly 3%. Brian Kelly. Yeah, really not seeing. There's a lot of. The issue with an ETF is mainly are the people issuing it solvent, and if something bad happens, will holders of the will everything be okay? ProShares, yeah, you'll be okay. I think so, for me at least. I mean, gosh, this is. I'm tempted to take out some of my holdings and I'm pretty strict about my capital in what I trade, so as easy as it would be for me to say, well, I'll just put some more money into it, I can't do that. I get into trouble if I just keep adding or removing money from the trading account. I need to practice fiscal discipline when it comes to my trading accounts. So I'm thinking, if my excuse me, if I have my Binance account or my Kraken or Bitfinex account, I might liquidate some of those and put in buy orders at stupidly low prices and see if any of them hit. That might be an idea. I don't know yet, but yeah, hard one to answer here. Certainly, we could see a pretty steep drive in one direction or the other. I think that's, now I'm just saying stuff that everybody knows. It's difficult to quantify. But if I'm just thinking structure here, if I'm just thinking of patterns and price and time, then the bias is to the upside. The thing I always tell folks in Forex Lens whenever we talk about Gann, and it's easy to say it when you know something big like this isn't coming, but it's that news does not drive the trend of a market. It doesn't. News is doesn't drive the trend of anything. The news is always a lagging event. It's the most lagging event after news-based traders start to do things. So time cycles are ultimately the only reason for trends to change. All right, you don't need anything else other than that. If you're trying to look at only oscillators and just going by a hunch of saying it's got to come down sometime, or if you're just going by news saying a trend is going to change, it does not work like that. I think a lot of traders get caught up in trying to find things to read that will tell them or give them an idea of which direction a market is going to go, and it doesn't work like that. So let's say, for a second, let's say the ETF gets denied. Okay, this is just kind of into a behavioral finance thing. We would have a much bigger sell-off if we were not where we're at and that ETF got denied. This is something where you can look at it to say maybe it's priced in. All right. I mean, if we don't have a big responsive sell-off, then we know it was priced in. If we do sell off, then we know it wasn't. But you know, there's been so much negative news, and this is actually one of the first things you learn in technical analysis is Dow theory, and the phases of a market. You have your accumulation phase, you have your public participation expansion, followed by your distribution, and then panic, and then consolidation. So one of the key identifiers of a consolidation zone in technical analysis is that not only is price action flattening out, but it can also continue in a downtrend and be in consolidation, because the sentiment issue is that the overall bias is negative in sentiment, which means in the news and in the trader's perspective. It's very negative still, but prices are not responding as harshly or at all to that news. So that's one of the biggest indicators that you have reached a market bottom, or that you're reaching the end of a consolidation phase, is that bad news is not affecting price. All right, because news, a lot of people trade off the news, and you always see a lot of short-term volatility on news, but then ultimately you always see things return to where they were, and that is more than likely what we're watching right here. So would it be a surprise to the market if the ETF got denied? No. Would it be a surprise if it was approved? Oh hell yeah. Oh hell yeah, it would be. That would be a big deal. A huge deal. Okay? We're looking at some type, I mean, here's the deal. News can sometimes be the final catalyst to initiate a move. It is, but news itself is not sufficient or a necessary condition for a trend change. We already know that there is a trend change happening on the 16th. We already knew that happened, because we see this time cycle has appeared, and that's where we're sitting on. What we are experiencing is a delay in that price action. And so it may very well be that tomorrow, the 23rd of August, what am I saying? That the 23rd of August is the catalyst in order for it to finally catch up. If it's not, I mean, let's say there was no news like that, we would see a gradual rise anyways. That is very typical of these cycles. I mean, we can go back in time and review any sort of cycle analysis and forward test any type of cycle on multiple markets, and we can see that when prices approach a time cycle, and we know what the largest bias is for it, that if there is not a response off of it within a few days before or after, then we just have to wait, which is sometimes a really, really nice it's a really, really nice kind of a you didn't miss the boat kind of phase. That's how I look at it. But I want to take a look now at the altcoin market. And let's look at what that is doing. Come on, TradingView. Oops. So Looking at our, here's Walton Chain. It's got a lot of volume that is poured in. Walton Chain, let's see. Looking at the market with the altcoins, they're all deeply red. I mean, we only have a few, at least on my watch list, that are actually positive, and they're not even that positive. But the great majority of altcoins are underperforming the entire market right now, and a lot of them are making new yearly lows with Bitcoin. So that is a something to pay attention to. If we're actually, we dropped into the 4300s again, didn't we, in Bitcoin? I guess not really much of a change there on the hourly. Yeah, this is just between now and tomorrow. It's going to be a waiting game, guys. I mean, this may be kind of a boring day and a boring tomorrow until we get some news. I'd be very wary of any crazy activity this afternoon going into tomorrow. You know, I wish I knew when the ETF thing was happening. Securities Exchange Commission schedule Bitcoin ETF. I don't know when the deadline is on this. Crypto fans swamp SEC email in frenzy to get Bitcoin ETF listed. Okay. Federal Research explains that postponing the decision over probably direction investments in January. Bitcoins. Okay, one of which will match Bitcoin's price, and 4 of which are based on the cryptocurrency's price movements. Okay, that's why those ones were denied, because they were not following a registered. That's why futures is going to be the easiest one. Atlantis Asset Management Chief. Okay, there's still no schedule on this. Dang it! I would like to see if anybody knows what time that is. Let me know, because I really want to upcoming events. Well, not really seeing. Let's see how their search function is. No. Oh well, that's fine though. That is fine. Didn't need that. Go away. Oh yeah. This 45-degree line is going to be an interesting one to pay attention to. I'm not going to be watching this like a hawk tonight. I'm going to set some alerts on my phone and let it scream at me if something moves. But if we break 6K, I want to get an alert. And if we break 7K, I want to get an alert. But otherwise, folks, with this ETF business going on, BitMEX has a crap ton of volume. And they have a pseudo futures market. I'm going to tell you right away, BitMEX is everything I would love to have a crypto exchange have, except it also represents everything that is bad in cryptos. It has it offers a stupid amount of leverage, which not only is it's predatory leverage. That's what it is. BitMEX offers up to 100 times leverage. That is predatory. That's predatory. It also does not follow. If you want, one of the main reasons why individual U.S. retail traders cannot open an account on BitMEX, it's a lot of it has to do with the leverage amount, and also they're not registered with the SEC. So some people ask, okay, how are some people trading on BitMEX if you're in the U.S.? Well, you can have an LLC, or you can be a registered or an accredited investor. So if I'm an accredited investor, or if somebody else is an accredited investor, that basically means, I believe the rules are, you have to check this for yourself, but the SEC says that an accredited investor is anybody who can show that they've had at least $200,000 worth of income each year for 2 years. And that is not including the value of their home. So really, to become an accredited investor, the rules are kind of, you just have to have some liquid capital. Now, I think that is the stupidest rule in the world. I mean, it really leaves... I really hate to I don't even want to say it, but I mean, it is a rule that was created to help protect, and I'm doing air quotes here, it was a rule that the government created to help protect you and me, because they know what's best for us and how to best, save adults from spending their money inappropriately. And apparently, having $200,000 in income means that you are all of a sudden wiser and smarter, and you can do things that little people can't. It aggravates the hell out of me that is a rule that exists, and it may take you a while to build up that kind of fund and that kind of income to be able to reach that limit, but it is what it is. Anyways, but BitMEX has a pseudo futures market. They have a pseudo settlement in there too. They have a funky kind of, it's a lot like Bitfinex in that it's very weird. And then it's also based in the Seychelles. Oh man, I cannot talk today. But it's in the Caribbean. And let's just be serious. Let's be honest. Not a lot of businesses that operate there are known for their let's see, what's the word, honesty. Is that the word? So keep that in mind, and keep that in mind where put your money. Be smart about it. But BitMEX represents a large amount of volume that is traded every day, and I'm curious why there was an upgrade done. From what I understand, it's a pretty significant upgrade that was done a couple days before this Thursday ETF. The timing of that makes me feel like they must be anticipating a lot of volume coming in. We'll see. We'll have to see. Yeah, I mean, really, I'm not looking to get anything today. I knew that today's session was going to be exciting right away to talk about the price action last night, but otherwise, looking forward into our day and into tomorrow, I mean, it's going to be kind of a drag. I mean, I'm really not going to be looking at this market much tonight and tomorrow until there is some type of final decision, and then we should see a significant amount of activity all over the place. That's going to be pretty wild. And again, we are getting into the seasonal bull move in cryptos. I mean, if we go back, let's look here. So these highlighted zones on the screen are the summertime, and if we go all the way back, here's 2010, and then here's the summer of, what is this, summer of 2011. Lots of movement afterwards where we ended up looking at in the fall, we had a fall rally happening. And then we look at the summer of, what is this, 2013. We actually had a rising market that summer. And what did we have in the price action going into the fall? We had a rising market. We look at the summer of 2014 and we have a falling market. You know what? Actually, let me make sure. It was in 2014 is 2014 is when Mount Gox happened. That's right. I really didn't need to look that up, but 2014 in February, that's when we had that drop. And we see that 2014 was a pretty dismal year. I mean, that pretty much, we went from 2014, look at all this decrease in price, followed by some support. Looks a lot like what we're experiencing right now. Then we have the summer of 2015. When we got into fall, we had a rising market. 2016, we had the summertime here. We had a falling market, but then we had a rise going into the fall. 2017, pretty obvious what happened there. That's the last rise we had. So, you know, summer goes from June 22nd to September 22nd. And so September 22nd is, you know, a month away. We have 30 days left. So we could expect to see some flattening of prices here, but you know, it's going to be an interesting next 30 days. I think we'll see the most activity that we've seen for the whole year, with the exception of January and February. We'll see the most activity happening within the next couple days here, and then going into the next 30 days, we'll see a pretty nice drive here, because if we look at, let me get this here. Because in the forecast to see, let's see, November 2018, where's my thing on August? So, yes, August through October in the financial astrology world. In financial astrology, go ahead and giggle if you want. Seems like a decent amount of YouTubers are predicting an end of year price below all-time highs for Bitcoin. Well, I don't, I think that's a normal opinion to have, especially if because I don't think a lot of the YouTubers, and I don't watch anybody else's stuff, I really don't, because when I got into trading, my big mistake was listening to people's advice. And so, you know, don't listen to mine either. You know, do your own due diligence. But, I mean, listen, going from 6,000 to 20,000 is not hard to do. If you've been trading Bitcoin, let's say if this is the first, if you only started trading Bitcoin, like, let's say back in October, then you've already forgotten how easy it was for Bitcoin to go from 3,000 to 20,000, okay? Because all you've experienced in this market, and if this is the first market you've ever traded, then psychologically, this is this may, I think I've talked about this before, but if this is the first thing you ever got into, if this is the first serious thing you've ever tried trading, then you are going to be light years ahead of everybody else, because you've been involved in one of the most prolonged bear markets that we've ever had in Bitcoin. I think the period that only matches the length of this down move is the Mt. Gox debacle. But the fact is, if you've been actively trying to trade or invest or whatever or be active in the blockchain ecosystem and cryptocurrencies in general, then you've been a part of a very depressing time to be trading. Sentiment wise, it's been horrible. But the thing is that if you're that trader that started in October and November, your brain has changed right now, probably within the last month. Your brain has changed from waiting to see the next quadruple move in price to wondering, is that ever going to happen again? And you've probably been conditioned now to be a bear, right? That's one of the parts of behavioral finance or behavioral trading that you notice is that people who are stubborn enough to stick in a market like this, they are going to be more resilient, but they probably unknowingly are also going to become bearish at the wrong time. And so, yes, it's very easy. So people like that, these YouTubers, I don't know what YouTubers you're talking about. If all they've ever talked about is cryptocurrencies, I'd be very leery of them, because unless they are traders themselves or unless they've been trading for a while, then they are not mature enough to be to emotionally to be you know. I'm not trying to sound hoity-toity here. I'm just like, it's hard for me to believe that somebody who's only ever traded cryptos would have the opinion that we're going to end up lower than the all-time highs, because that's not something that if you look at the past price action of Bitcoin, that's a very unlikely scenario. And I don't know, are they saying like end of year, like by December it'll be lower? Because these bull move expansions that start in the fall and end in the winter, they can go into February, and very rarely they can go into March. So there's a 6-month period of a high probability of a rising market in cryptocurrencies and Bitcoin, and what I'm thinking is that a lot of these YouTubers who are predicting an end of the year price below the all-time highs, they're just victims of this entire market. They are actually great representatives of the sentiment of the majority of the traders, because that's all a price chart is. It's a visual representation of the psychology of the participants. This is all this is. And if all of those YouTubers are kind of all feeling like we're never going to get anywhere now, then for me, I'm a contrarian. I love to hear that. I think that's great. So yeah, there could be a lower move. We could close lower than the calendar year high. The calendar year high is different than the all-time high. The calendar year high is where you at? January 1st. The calendar high is 13,921. Okay? That is the calendar high. Hello? Hey, Dad. Hey, can I call you right back? Oh, okay. Yeah, I'll call you in like 10 minutes. Oh, okay. Bye. Sorry about that. Thank you for that. It's been a really hard couple months, like really hard and difficult, and I won't quit. Yeah, Mike, I mean, that's the truth. It's this is a punishing market for folks who are trying to trade it. And even I think this is rare, but it's even harder for those who are holding. And it's I think this is one of the ugliest markets I've ever traded, and I've only been trading, for like profitably for I'd have to go back and check, but this is a hard market, and the fact is that everybody most of the participants in this market are new to trading in general, which is weird to me. I think it's great for you know the expansion of trading, but it's very damaging for people wanting to get into trading, because a lot of people who try trading, they end up walking away from it thinking it's a rigged game, and that's a zero sum game, and that it's manipulated. And the fact is, well, you just probably weren't meant to be a trader. That's all it is. There, one of the things I always get that bothers me, and it bothers me because this is how I came into trading, was that I thought I can get a couple books, I can do some technical analysis, read candlesticks, do some Elliott wave, understand how an RSI works, and that's all I really need to know, and I can, and it's easy for me to get into. I can just open up an account and start trading, and that's, I'm 90% there to making my life independent and profitable. Oh God, is that wrong? So one of the questions I get, I'm on Quora.com. I'm one of their most viewed writers for a lot of the trading categories, and when somebody says how long will it take for me to get into trading, or how easy is it to get into trading, or how difficult is it? The thing about success at trading, and the only thing I can compare it to, is like if somebody were to say, or if I went up to somebody and said, listen, I'm going to go buy a baseball bat and a glove, and I'm ready to play for the Yankees now. That is literally the thing that I think when somebody says that they're ready to trade full time, or that they think they can do it, is like, that is impossible. It's trading is stupidly difficult, and it's very hard. But okay, so how long do you think it'll be until we can trade crypto with brokers like how they do it in Forex? That's a very good question, and I think that may be happening sooner than later. Like the Forex broker that I use is Oanda, and I know for a fact that they've been getting pretty swamped because the European the ESMA, is that what it is? The European Securities, whatever, it's the SEC equivalent. They had rules changed just in the end of July, beginning of August, where their leverage, leverage limits in Europe used to be stupidly high, where you could get like 1,000% leverage if you want to. I mean, just real predatory leverage rates. And binary options are criminal anyways, I think, but binary options are illegal in the EU now. There's monstrous leverage limits that are more in line with the US and Canada. And so a lot of these brokers who made a living off of taking advantage of new people with predatory leverage amounts, they're going down the tube. So, the people who have had to do business in a regulated environment, like the Canada and the US, those brokers are getting a lot of business. So they have rules to follow, and they have a lot of, if you think about it, the Forex market is now regarded as a more honest trading environment than cryptocurrencies. Which, until cryptocurrencies came out, people viewed the Forex market like they do cryptocurrencies right now. Like, it's just things manipulated, blah, blah, blah. And, in fact, I think Forex is the easiest thing to trade, to be perfectly honest. But I don't think it'll be long. And I know for a fact, well, I don't know for a fact, but I have a hard time believing that Gann Capital, who now owns Forex.com, and Oanda, I have a hard time believing that they have not done their research into either acquiring an exchange or building their own for their service, because they already have the infrastructure in place. I mean, they would be light years ahead of even Binance or Bittrex or Coinbase in that respect. They would be light years ahead of them as far as infrastructure, quality of data feeds, relationships with regulators. They would be way ahead of everybody else. And I would be surprised if it took more than another year for us to see some Forex brokers open up trading, with cryptocurrencies. And a lot of it kind of boils down to if we get an ETF approved, I think we'll see cryptocurrencies on forex brokers. I think they know they're fools for not adapting, but yeah, that should definitely be something we see here in the near future. Um, yes, but is it possible that Gann's market cycle theory can be negated because of an ETF denial, or does market cycles always find a way to continue its course regardless of fear, uncertainty, and doubt? Some people say crypto follows technical analysis more than forex. Is this true? Well, let's see. I have this article. There is not a piece of software that is built for bigger Gann nerds like me than Optima. And Matthew Verdau, he is the, I believe he is the CEO of Market Analyst, I think. Yes, he is. He's a chartered market technician and a CFTE, and he called this the perfect technical market. I mean, and if this guy calls it that, then you know it's true. Because I've always thought Bitcoin is very, it responds creepily well to so many different forms of technical analysis. It's really fascinating. It doesn't deviate a lot. I mean, in forex and in like futures markets, you have to give things a little bit of a variance on certain levels and angles. But Bitcoin, for whatever reason, it'll like stop dead on a lot more often than not. But yeah, Bitcoin is very much a technical analyst's favorite market if they can stomach it. But to answer your question, Mike, is it possible that Gann's market cycle theory could be negated because of an ETF? I'm going to tell you that is the big no. It cannot be negated because Gann's approach to market cycles is based on, and this is where you gotta kind of understand where Gann was coming from, and this is Gann was a very devout Christian. He grew up in a very conservative Baptist home, and he continued that belief throughout his entire life. And really, the result, but he was a very logical thinker too. I mean, so he was very religious, but he was also very logical. And and I don't know why that matters. There's a lot of people who are religious and logical, and I don't think you can be. Anyways, I'm babbling here, but he came to the conclusion that, you know, if there's so much order in nature that anything random, like God, if God created everything and he created everything with a lot of structure and order, then that has to exist in everything. And that things that Gann was like, if things that appear random, then that is just our inability to process the order within it. And so Gann was, in a lot of respects, he was light years ahead of a lot of other people in thinking about fractals and chaos theory. You know, that there is order that exists in everything, and part of the approach of Gann is understanding that there is a set pattern and cycle that man cannot deviate from, and that it's impossible to try to influence it. And ever since I've started trading with that kind of mindset, as much as it doesn't make sense at times, it's always worked out for me. Yeah. The only frustrating thing regarding the time cycles is that you may know when that is going to happen based on a time cycle, but it can take price. This is where Gann used as the angles is that you'll see price either lagging or moving too fast in relation to the time cycles. When you get time and price squared perfectly, that's where you see very, very fast actions because they're moving in equilibrium. But that doesn't happen all the time. So you gotta, that's where the trading analysis comes in a lot with the time cycles is you just gotta be a very good analyst when that happens. Anyways, I am out of time. It's 2:04. Please subscribe, like, and we're trying to get this out there more too. If you could leave a comment in the comment thread, that helps out quite a bit too. Again, this is going to be a paid service sometime here in the near future, and love to see you guys there when we start doing that. Forex Lens customers, I will see you tomorrow morning. For the rest of you, if I don't see you in the morning, I will see you tomorrow afternoon. Have a great rest of your trading day, and look out for the activity overnight tonight, and be careful. Bye-bye.